Welcome back to Click Capital, everyone, your go-to channel for the latest daily fundamental and technical analysis of the markets. I hope you all had a great weekend and another quiet day here on Wall Street to start the week. Pretty much flat. We did see the NASDAQ come off a little bit. And even though it was a flat day, we saw the VIX 9-day actually jump 11.9% today and is almost higher than the normal VIX 30-day. So that's close to getting into a backwardation, which we normally see when the market is about to sell off. And we're seeing that in the volatility risk premium as well. That's the difference between the VIX index and the realized volatility. And that's climbed today and finished at 7.36. So the volatility market is pricing some upcoming moves in the stock market after we've been quiet here for a couple of weeks. And there's just not much fear out there, and we can see that in the put-call ratio really low at 0.84, and breadth as well, only 67% of stocks above their 20-day average, and that has been rolling down this last week. But we'll come back to the charts. Let's go hop over and look at some data. So similar pattern to last week, pretty mixed and pretty flat out there. We did see the pop in energy today, and defensive sectors, consumer defensive, utilities and healthcare did pretty well today. And most of the high valued mega cap tech stuff kind of sold off today, and financials were a little weak as well. Not much in economic data today. We did see the Dallas Fed Manufacturing Index, which shows manufacturing in Texas coming off a bit worse than expected at negative 23. And Texas is the second largest manufacturing state after California, but they're number one in terms of exports. So an important state to pay attention to. And a continuing trend we've been seeing in manufacturing contracting, but we haven't seen the same in services yet. So still a few mixed signals out there in the economy. And tomorrow we've got new home sales data coming out, and we'll be looking for that to be a bit weaker than expected given the tighter lending conditions we've seen over the last month or so. Fear and greed still holding up in the mid 60s. Dark pool buyers showing no interest in this rally. Same with corporate insiders, they've been flat for weeks now on their purchases. Much the same in the options market, 30 million contracts traded today, 54% of them calls, and interestingly we only saw 13% of puts in gold, which means there's a lot of bullish positions being opened in gold, maybe people buying the dip on this pullback. And a hike at next Wednesday's Fed meeting looks all but a sure thing, with 90% chance that we get that 25 basis point bump up, and the market's even pricing in a 1 in 4 chance that we get another 25 basis point hike in June. So that's definitely a headwind for tech stocks going forward. And interesting, on Friday we got data come through that BlackRock CEO Larry Fink sold almost $25 million worth of shares last week. And this is a stock I follow closely because it's a large stock, 100 billion market cap, and the success of their business is based on how much funds they have under management. So you can look at the price action and what insiders are doing in this stock as kind of a leading indicator for the health of the US stock market. And when you see the CEO Larry Fink, who has his finger on the pulse of the stock market pretty closely, offload such a large amount of stock, that shouldn't give any confidence to the bulls going forward. Okay, that's it for data today. Let's head on back over to the charts. So major stock indices and sectors all around the world are coiling up with low volatility at the top of their ranges. Here's the TSX, the FTSE, the DAX, the Nikkei, the Aussie 200, and the China 50, which has been selling off these last few days. And we could see the VIX jump this week going into the Fed meeting next week. We're at really low here, still under 17, but if you look at our seasonality forecast indicator, for the next 7 days going forward, the VIX will typically jump 11%. And that's looking back at the last 10 years of data for the same time period going forward. So I do expect we are at a bit of a bottom here in support and volatility, and it's just hard to see it going much lower with the economic backdrop and just getting into the meat of earnings seasons and Fed decision next week. We could easily see the VIX back up at 20 over the next few days going into next week. And even though it was a pretty flat start to the week, we did see some spreads roll over a bit. Here's the gross cyclical sectors versus defensive sectors, down 0.61%. And high beta came off again a little bit. Growth versus value stocks is coming up to test its 50-day VWAP here. And this has been in an uptrend pretty much all year. And today, for the first time in a few months, we saw tech stocks close under their 50 versus SPY. And that's been in a strong uptrend all year with that rotation into tech. And I suspect now that the banking crisis has settled down and rates are back on the march higher, this trade has started to turn now, and we could see some more upcoming weakness in tech stocks relative to others. And the 10-year trading thick at around 350, and Fed fund futures kind of really coiling up here. The volatility's been taken out of this market, and it looks like Bond traders have put the focus squarely back on inflation, and we are going to get more hikes from the Fed. TLT sitting right at its 50 and high yield still above its 50 as well. Dollar's testing its major support zone at 101, and Bitcoin as well coming up to its 50 to see if it can hold on to this uptrend. Commodities perked up a little here today on good volume, and gold still holding the $2,000 an ounce level. Crude defending its 50 as well and looking to stay in an uptrend. Agricultural commodities continue to trade well in a strong uptrend, and lumber as well shot up above its 50. Much the same theme today in stock sectors as we've seen last week. A bit of weakness in tech and semis, trading below their 50. Looks to have maybe lost this big resistance zone. Energy and oil performed well today, along with materials. And once again, we're seeing strong price action in the defensive sectors. Here's healthcare, consumer staples moving up there, and utilities as well. So we're seeing this rotation into defensive stocks, and these stocks are less exposed to the changes in the economy and will be less affected when the recession hits. So when big investors expect a recession to come, they'll typically reallocate funds into more defensive sectors like healthcare, staples, and utilities. So that's a sign that big money is positioning into more safer areas of the stock market. And once news broke on Friday that CEO Larry Fink of BlackRock sold $25 million worth of stock, we actually finished down 2.2% on volume and found lower highs and lower lows today. I suspect we'll come up and test our 50 bar and see whether we can find support there, because we did get that gap up after earnings, but it looked like the CEO took advantage of that gap up and sold into it, so that's not a good sign going forward. Tesla found new multi-month lows here today, and I do suspect we'll come down and fill this Q4 earnings gap towards 146. And we'll see whether we can find support there. Nvidia was pretty much flat, as was Apple. Microsoft came off a bit today into earnings tomorrow, so that'll be a big one for tomorrow. We got Amazon on Thursday as well reporting, and Google tomorrow as well, along with Meta on Wednesday. So a big week for mega cap tech earnings. So far in this earnings season, we've seen almost 70% of companies beat their EPS estimates from analysts. However, the estimates are down about 6% on last year, so it is a low bar. And typically on average, you'll see 77% of companies throughout entire earnings seasons beat. So we're coming up to about the halfway point through earnings season, and we'll be looking at that target, and we'll be looking at how many companies are beating their estimates. If that trends lower than 70%, that will be bearish for the stock market. And we'll be also looking for the guidance and commentary from these mega cap tech companies and what they think about the economy and their industries and companies going forward. And since they've all been laying off a lot of staff, it's hard to see them given a lot of bullish, optimistic speak, because that flies in the face of their most recent moves and will be highly insulting to all the staff that they've let go as well, if they talk about things improving whilst at the same time laying off thousands of staff. Meme stocks got bushwhacked again today, especially Big Bear AI and C3 AI as well. You've been hearing me talk about this one ever since we saw this big move on Thursday down. Then on Friday we lost support, and today it's come off 11% again as well. I'm quite confident ever since up here when that short seller released the report raising claims on their numbers and a few accounting issues. I'm confident to say I think we've seen the top in this, because even if their numbers are all accurate and true, it's still ridiculously overvalued. And this company and CEO has a long history of changing the company name and business model and whole story just to adopt the latest trend and fad in order to hype the stock up, according to the short seller report. So again, I wouldn't be surprised to see this trade under $10 a share in the upcoming weeks and months. And since this is the high beta play on AI, this is kind of like the canary in the coal mine. So this may well be indicating that the whole AI hype train is over for now. We've got Enphase Energy reporting tomorrow, which we'll be looking at. Volatility continues in AT&T, coming off 3.8% today. And First Republic Bank, after Silicon Valley Bank that went under, this one's probably the most vulnerable one. We had a big rally today, up 12% going into earnings, which just happened after close as I speak. And right now we're selling off 21% in after hours. So that still doesn't look good for First Republic, and unlike most of the other banks, even the vulnerable regionals, it still hasn't got above its 50-day VWAP. PacWest looks to be just holding on to its 50-day, and Western Alliance is well above its 50-day. And remember, we saw big-time bond investor Bill Gross invest in this as well. And here's the big guys just still having a little bit of a pullback. Citigroup, and Wells looks to have found some dip buys there. Schwab hasn't been able to close above its 50 yet either. So this one's still a little bit on ice. Okay, that's a look at all the major market categories. Let's go back to the main indices for our final outlook. So I know I sound like a broken record, but again, it's much the same thoughts as last week. We're still seeing this divergences and weakening price action, volatility coiling up, and I still believe this is a good chance we've made a short-term top already. And as long as this yellow line here, which measures central bank liquidity, stays low, I think any rallies up to 4,200 on the SP500 will just get sold off. And I continue to stay positioned 60% net short, as I can smell a big red candle or two just around the corner. Okay, that's it for another flat, quiet day on Wall Street. Thanks for tuning in, and I hope to see all you guys again tomorrow. Cheers.